Kogi, Lagos, Bayelsa pay more for food as inflation numbers hit 24.08% in the month of July. And of course as well, the dollar also crashes to 790 naira in the parallel market against the United States dollar. Welcome to Business Daily. I am Yusuf Akogu. We take our business top stories. Glad to have you back. Now we quickly give you stock market data as it went down yesterday on the floor of the Nigerian stock market. The market closed in the negative territory yesterday, 0.43%. It went down on Tuesday. Yes, 280.46 million volume of trade exchange hands among investors, valued at 4.645 billion naira, and in the deals of 6,296 as well. And of course, the all share index came down yesterday. It lost significant number yesterday to close at 64,928.98 basis point there. Of course, the market cap also came down with over 200 billion naira. We look at the top gainers on the day. Indeed, of course, the likes of Tantalizer, of course, on the gainers table today, 10%. It gained on the day to close at 44 kobo per share. Of course, Ikeja Hotels there also there, 9.82% to close at 3 naira or 13 kobo. Cornerstone Assurance of also closing negative. I mean positive as there, 9.30% to close at 1 naira 41 kobo. We look at the top losers. Of course, we have the like of Entana Oil on the loser side, 9.86% to close at 16 naira per share. Of course, Sunu Assurance also closing at 9.62% to close at 94 kobo per shares. Omatek down 8.11% to close at 34 kobo per shares. So we look at the performance across sectors. It indeed largely dominated by the banking sector, with the exception of Transcorp Nigeria, 36.5 million volume of shares it traded. UBA, United Bank for Africa, 23.2 million volume of shares. And of course, Access Holdings, the mother company of Access Bank, 17.7 million volume of shares of that company were traded on Tuesday. We look at the sectorial performance, all of them in red, negative 0.808% for the banking sector, industrial sector 0.06, the consumer goods down 0.68. Of course, the oil and gas also down 0.40%, and the insurance sector all down as well, 0.40%. Largely negative performance across all sector yesterday on the floor. We look at the rest of Africa and see how they are doing. Of course, it's a mixed bag as well. GS in South Africa, of course, is also down 0.84%. That's Johannesburg Stock Exchange there. Of course, in Ghana, of course, the market tick up a little bit, 0.14% on the day. Of course, down in Nairobi, it went down even further than it were yesterday, 1.26%. The market ended yesterday in Nairobi in Kenya. Quickly, let me speak to my guest, Mr. Steve Nwachuku. He's a stockbroker. He joins me via phone to let's get his reaction with regards to the stock market performance. Good morning, Mr. Steve.
Good morning and thanks for having me.
Yes, it's a mixed bag across trading floors in Africa continent. Well, I can see that Nigeria market went down yesterday. That is also reflected in the performance of markets across Africa. What will you say to that?
Of course, there will always be a time and a period in the market where you go down and you also rise. Given the fact that Nigerian market in particular having received some goodwill of investors, some level of liquidity that flowed into the market in the last couple of weeks and months, and we have witnessed close to above 20% 20% increase in our all share index and market capitalization. So there will always be a moment like this, a 1 to 2 weeks or 2 to 3 trading days where you see investors taking profit and the market shedding most of the gains it has received in the last couple of days. So the market, Nigeria in particularly, lost as a result of some macroeconomic indices or information. You witnessed yesterday that MBS came out with the July inflation figure, and which saw the inflation rise above 100 basis points. So from somewhere around 22.79 to about 24%. So that's over 100 basis points and within a month. And that is frightening enough. And investors are chewing in these figures and other figures that are also coming from the money market. Like we also witnessed 2-3 weeks ago, or 2 weeks ago, the MPC of the CBN raised the interest rate by 25 basis points from 18.5% to a current position of 18.75%. So these are all data and information that are not too favorable to the market, but the market is weighing on it and actually making a good of this very information. So the market will still rebound given the fact that, like I said, fundamentals of these very quoted equities are quite strong, and with also the information that NMPCL will soon be approaching the market for listing. These are all good news around the corridor of the market. So the bull is still expected to still stay within with the market. For now, the bear is having its way.
Indeed, the bear is having to it. Mr. Steve, yesterday there was also an information from presidency that the federal government is also, from the Ministry of Finance rather, that the federal government is also planning to revive some moribund government assets and list them on the floor of the Nigerian Stock Exchange. What do you make of that? Is that the right decision to take at this point? And what value do you think that will bring to the market?
Well, let's look at it from the two perspectives. One, the government is increasingly driving for revenue. So how is the government going to fund the budget if you don't borrow? Yes, as it is being canvassed, most of these very moribund assets of the federal government should be put for sale. Those that need to be put for sale, those that you need to move into memorandum and agreements with partnership or PPP, or like you have the LNG pattern or model should be applied to that of the NMPC. So a couple of them will be made available, like you said, Federal Ministry of Finance making available those information, about 18 or 19 of them, which is looking forward to approach the market. And what that simply means is that yes, the investors will be buying not for the immediate gains, not for the short or medium time gains. They will be buying those assets to revitalize them, bring them back to life and turn them into a profit-oriented organization or entity, so that the shareholders, those who will become the shareholders, those who will buy into them, will be able to also have something to go home with as a return on investment. So it's a good one. It's going to also bring some level of liquidity into the market. It's also going to raise the capitalization of our Nigerian Stock Exchange, which currently stood within around 35 trillion, maybe somewhere to 37 to 38, because most of these assets are worth trillion. Take, for instance, NMPCL is worth more than 10 to 15 trillion naira based on its assets and based on its reserves that is within the control of the NNPCL, because it is believed that NNPCL is in custody of the reserves of our both gas and yes, partially part of our gas and the crude oil is quite there within the purview of the Ministry of Petroleum, which possibly will be floating this. I'm sure they will not be only be floating the crude aspect alone, which is the NNPCL. The retail, that is the downstream aspect of it, will also be made available for investors. So it's a good one for the market that such huge entity or such huge company will soon be approaching the market, and investors will be also having opportunities to buy into them. And have in mind that a good percentage of that purchase will be foreign-based. So it's going to attract a lot of billions of dollars that we are looking for. I think that's the major aspect of the gain for the federal government, is going to boost the liquidity in our forex. By the time foreign investors that will be interested in this very NNPCL will be coming in, it will show up our forex reserve.
Okay, Mr. Steve, before I let you go, let me quickly get your reaction to the inflation numbers that was released yesterday. You made a reference to that when you were talking about the market performance at the beginning there. Let me get your reaction to it. Do you think that number is actually the real number? Looking at what we're actually seeing in terms of the transport sector, which only increased by just a little over 1%.
That's what, well, most of us have always queried this very figure, given the fact that the inflation, in the real-time inflation, in those commodities and items that we daily consume, those services that we receive from businesses, the percentage of their increase cannot be compared with what the Nigerian Bureau of Statistics has been coming out with. Honestly, I'm not trying to be a prophet of doom. I am actually looking at it from the perspective that this number should be somewhere above 28-30%. But we are lucky. We are having an MPS which using their parameters, looking at other things that perhaps are not the realities, and we are having an inflation rate still within less than 25%. That's a good one for us. But based on available statistics and realities, the inflation figure should be within the range of 28 to 30%, because Nigerians are suffering, cost of living is high, and all that are a reflection of what these numbers should be reading. Otherwise, we are seeing just 100 basis points, but some of these items that we consume, from the garri to the grains, the rice, the beans, have gone up way above 40%. Absolutely. But we are just having a 100 basis points rise inflation rate. So we continue to call on government to weigh in this very figure, so that the suffering and the inflation will not continue to erode the finances and naira.
All right. Steve Nwachukwu, I must thank you for your time on Business Daily this morning.
Thanks again for having me.
All right. We switch gear now. No, though we're still talking inflation, we're looking at the comparative analysis between Nigeria and, of course, South Africa. And I have joining me an investment trader and founder, Herenya Capital Advisor, Petri Redelinghuys. He joined me virtually from Johannesburg, South Africa. Good morning, Petri.
Good morning. Thank you for having me.
Yes, glad to have you. Let's start with the JSE performance in recent times. It's not really been so impressive. What do you think is responsible? Are investors not really paying so much attention?
Yeah, I think, I'm not sure when was the last time we chatted. We've had a few public holidays here, so it's been a little bit of a while. I think the last time we spoke about sort of the interdependence between us African countries and China, and how we have an expectation really for the Chinese economy to recover. That, however, seems to be not happening. We've seen a number of very worrying things coming from China. Firstly, they announced some more stimulus today, cutting Reserve Bank requirements, cutting interest rates, trying to stimulate the economy. We see that their retail sales numbers as well as industrial output numbers were all below expectations, although still positive, below what the market was expecting. And worryingly, we also saw that iron ore orders for their factories in China is down by some 30%. So this is all pointing towards a very difficult circumstance currently in China, and it just seems as though it doesn't matter what they're trying to do to stimulate their economy, it just can't get going. And that, I think, is a large part of the reason why we're seeing emerging market currencies, such as the rand, for example, performing as weakly as what it is, as well as our market really coming under pressure. I mean, if you look at the top 40 index, we've lost almost 5% in the last 5 trading days. So it's been a really difficult market to try and navigate. And I think that adding on to the discussion you were having just a moment before, inflation is also seemingly a lot more persistent than what we would like, which spells an even more difficult economic environment. So our expectation has changed from being somewhat optimistic to being somewhat pessimistic. I think that probably it gets a bit tougher from here. If we look at the South African top 40 index in particular, we're now trading at the bottom of a range where we were last in sort of the early parts of July. So around a month ago, we were trading at these levels. I think if we continue to trade lower, we might see the lows that we saw sort of mid-March, potentially late December last year, and potentially even going into negative territory for the year.
All right, Petri, just hold your thought there. Let me show you the inflation numbers as it is now in Nigeria here. Of course, the data came out yesterday. 24.04% we're having in the month of July compared to what we had in June, which is 22.79%. If you look at the difference between what happened yesterday and what we had in the month of June, it's about 1.29%. That is way over 100 basis points. If you look at it on a year-on-year basis, the numbers also declined by 4.44% compared to what we had, 19.64% that we recorded in July of 2022. Of course, the food inflation is very, very huge there. You can look at it, 26.98%. It went down yesterday. And of course, this was about 4.97% higher than the 22.02% that we recorded in the month of June. And if you go further, you look at the sector, the major contributing sector to this decline that we had yesterday, 12.47%. That is the food and non-alcoholic beverages there contributing this number. Of course, housing, water, and electricity, 4.03%. Of course, gas and fuel, 1.84%. And of course, if you look at clothing, footwear, and of course transport, 1.57%. This number is in a way, I don't know whether many Nigerians will agree with that. Furnishing and household equipment also down there, 1.21%. And if you go to education, 0.95%. And of course health, also 0.72%. Petri, looking at this number that we have in Nigeria, I know you are still having a single-digit inflation in South Africa. Do you think that number is a realistic number?
Well, I think, I guess this draws into question the quality of the measurements that we take here, because I think the lived experience for most South Africans is that our inflation is somewhat higher than what is reported.
Absolutely.
Looking at the inflation figures that you just cited, I think that's the highest inflation has been in almost 24 years or 25 years or something like that in Nigeria.
Highest in 10 years.
Which is extremely high. And I think it's important to remember that that Nigeria has had double-digit inflation essentially since 2016 to now. So yes, it is the highest it's ever been really now, or the highest it's been in almost 2.5 decades.
Absolutely.
But I think what's happening is a lot of the reforms that your government has put in place is having a very severe short-term impact on the market, right? The entire idea behind the reforms, taking away the fuel subsidy, for example, and opening the forex markets to allow freer trade of forex, that's been a large portion of the inflationary pressure that you've seen as the fuel prices are really just rocketing and pushing up the price of all the goods and services, particularly that in the food sector. And then, of course, the currency devaluation as well, because people are able to essentially move money out of Nigeria a lot more easily. This is a short-term effect, if you will. I think your previous guest was making the point that a number of things are happening. High interest rates make it attractive for international bond investors to come and invest in Nigerian government bonds, and therefore, support the government in terms of creating liquidity and funding government and funding projects and that type of stuff. And also, high interest rates might mean just sort of cash deposits into your banks, which is not too bad either. It's a very positive effect. In the short term, the impact on the average consumer, on the everyday Nigerian, is really tough, right? I think that this creates a lot of grumbly people there, because people are having a hard time adjusting to rapidly increasing prices and really have to rethink the way that you do many things in your everyday life. But the long-term vision here for these changes is to make Nigeria a more attractive international investment destination. So yes, I think that in the short term, there's a lot of pain being felt, but the longer term impact of these reforms, should be positive. You might just have to go through some difficult times before you start to feel those positive impacts.
Now, talking about in the short term, Nigerians expected to, experience hardship as is being felt right now across the country. What do you think government should do as a stopgap measure to ensure that to cushion the effect? Because given the way Nigerian economy is, we have this the endurance attitude of always trying to hold on while we made a whole lot of sacrifice for government to get things right. This somehow is not what is obtainable in South Africa economy, where people revolt at every slight changes.
Yeah, look, we have a slightly more volatile situation here. When times get tough, our people tend to protest and burn things and lose their minds a little bit, if you will. I think that the Nigerian people are not as volatile as the South African people. So you're maybe a bit more resilient than what we are, and maybe a bit more patient than what we are. I think it's very different situations. I think the South African populace was very much promised at the end of apartheid many things that the current government that took over when apartheid ended has not managed to deliver. And there's I think that's a large part of the reason why we do see so much social unrest here. In a sense, your government has now come in and made a lot of reforms on the back of some promises in the long term. And I think that, in the South African context, we're almost 25, 30 years into unfulfilled promises, right? And that creates a very unhappy populace. So I think that Nigeria's got a long way to go before, the mood in Nigeria is similar to that in South Africa, if that makes sense. And you said it now as well. The Nigerian populace has a bit more of a resilient sort of outlook on life, like whatever the challenges, we will continue to push forward and overcome it, right? So I think how the government can act to support you in this stage is, a large part of the reason that the reforms were put in place is because the government wants to increase its income. So it's managed to earn an enormous amount more over the last 2 months that these reforms have been in place. So if those funds are channeled into infrastructure projects and to building the facilities and providing the resources and the services that the Nigerian people need, I think that would bring relief to the increasingly difficult economic situation, and two, would also kind of buy that favor that the government is looking for from the people. I wouldn't say buy the favor, but prove that their plan is working, right? So we know that they're earning an enormous amount more than what they were, just 2 months ago. How is that money being spent? Is that money finding its way back into the economy and back into the people?
Absolutely. Petri, before we go, let's look at South Africa June retail sales figure that is expected to be released in a couple of minutes. I don't know if it has been released. If it's not, what are your expectations?
My expectations aren't really that positive, I'll be honest with you. I want to just see if it has been released as yet. I can't really see that it has. So yeah, I mean, the expectation really isn't that positive. I think that the majority of market participants here is expecting for retail sales to be poor. We've had a number of different challenges again, and it's very ironic, I guess, that every time things look as if they're going to start getting better, there's always some sort of a catalyst that sets us back, right? But yeah, I guess we'll have to wait and see. I mean, the major things that we've been watching out for is what is the impact of load shedding or intermittent power cuts, what that has been on the economy. We saw some of the mining companies coming out and with results and trading statements and things over the last week or so, and a lot of them cite loss of production hours and loss of reduction in output due to electricity constraints, what they call the disruption events, essentially load shedding or power cuts, right? So that is really is affecting manufacturing, it's affecting mining. What we saw with retailers putting out trading statements and updates a little while ago was the enormous cost of running generators in order to keep their operations going, because what was happening in a large part of the retail space is when power cuts out, they'll run very large generators for a number of hours at a time, and that can cost hundreds of millions of rands on a sort of quarterly basis in order to keep your operations going. So we know that the retailers are working really hard to keep the lights on, so to speak, and the doors open. But whether or not the sort of consumer has the ability to go and spend is the one we'll be seeing today. So whether those retailers are able to recover the costs that they have to spend to operate. I don't expect much, to be honest with you. I think it's probably going to be quite poor.
Okay, all right. Quite a whole lot to look at. The BRIC Bank also issued their first South African rand bond yesterday, but there's no time for us to talk about that. Maybe when next we speak, we'll make reference to that. Petri, Redelinghuys, investment trader, and of course, chief founder, Herenya Capital Advisor. I must thank you for your time on Business Daily today.
Thank you very much for having me. Have a great day.
All right. With that is a wrap on Business Daily today. Join us again tomorrow for more. I am Yusuf Akugu.